Welcome to the analysis checklist section of the course. In this course, we'll be going over the entire checklist, which is technical analysis, in order to derive a bias. And we covered this in a previous section, but this time around, I like to visually show you the checklist as well as emphasize true support and resistance, which will allow everyone to properly identify their ranges. Let's begin. So here we have the chart. We're currently looking at British Pound JPY. We want to look closer to relevant price, which is here, right? Because if we're looking way back over here, this is 2015. So you want to focus on relevant price. And specifically with the monthly candles, you really just need to see what's going on here. So if we're looking at the monthly candles, we can see that price is currently in this range here, right? And then we have a monthly bullish candle with no bottom wick. So chances are likely that we can expect this candle to come back down to form the bottom wick, because we already understand that majority of candles have an upper and lower wick. So the monthly is currently bullish, and we're expecting it to potentially reverse. There's also a minor range that is here as well. If we take a look, we can see a minor range forming right around here, right? Price hasn't been able to close below this range. So there's a whole lot of range to fill below if price does continue down in the months to come. So our monthly is currently bullish, and we are expecting a bottom wick to be formed. Moving over to the weekly, we can see this is quite interesting for you all. This is going to teach you something about gaps. This candle opened up right here. It's a bullish weekly candle. It opened up here. But last week candles closed right here. However, a gap occurred where this new candle opened up here and is currently driving bullish to fill the gap that was created. So why would a gap occur? Well, we know that the market closes on Fridays and open back up on Mondays. So this is this week's candle. We're only in the second day of the new week, and there was a gap that occurred. And gaps are pretty much just clean traffic, so we can expect a gap to be filled. Price will drive back up to fill that gap. So again, we have a clear gap here because the market's closed here on a Friday, but the new candle opened up here, driving bullish with no bottom wick, and then we can expect the wick to be formed, right? Because we know the majority of candles have an upper and bottom wick, so we wait for the wick to be formed. Now we see that price is giving us this previous candle that is bearish, this previous candle that is bearish. So the last 2 weeks were in fact bearish, and we can also see that some sort of resistance was formed here because we got a rejection, 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 and rejection. These candles couldn't close above that. And then we can also see that a support was formed here. We can anticipate price to come down to form this bottom wick. If it closed here, then it did something that these candles to the left couldn't do. These candles couldn't close below this area. So if this one actually comes down as a weekly candle, becomes bearish and closes below here, we can anticipate that price will continue to drive down just by observing what we see on the chart. For the daily time frame, we're looking for identifying major structure. We see that in this structure there's a resistance formed up here. This is a lower high than this high, and this high is also lower than this high. So ultimately this structure is a downtrend. But if we look at the support down here, then we see that there's some form of range being formed. And then coming up again, we got a support here. And then we see that the gap occurred because last week price couldn't close below here, but a gap occurred. And this is a huge gap. I mean, we also have to take into account that there's things that are occurring right now within the world of events. Russia attacked Ukraine. When you have this sort of hostility and instability, potential instability, a lot of investors and institutions, they run over to gold and they run over to safe haven assets like Japanese yen. Japanese yen is a safe haven asset. And that's why when gold is rising because of this sort of fundamental events that are occurring in the world, we can also see that British pound, Japanese yen is falling because people are selling their pound in exchange for yen. So going back to our structure here, again, this gap, the gap is going to be filled. It's being filled. And we can anticipate that if this daily decides to close below and flip somewhere down here, we will continue to drive down. Moving over to our 4-hour, looking at the overall structure, we have a downtrend here. We got this small range that's formed right here. Price is currently driving up to the top of the range, but a minor resistance was formed here. If we can get closure above here, we can expect price to continue driving here before reversing to come back down. Now the 1-hour is where we're going to establish our actual range, the one that we'd like to be taking trades on within the 15-minute or 30-minute time frame. We established this range on the 1-hour time frame. So we already checked the monthly time frame, we already looked at the weekly time frame, and we already looked at the daily time frame, as well as the 4-hour time frame. The minor trend is still within compliance of the major trend. They're both heading down. Now, we looked at the 4-hour time frame, just going back for a moment. We see that there's no trend challenge. We do have price driving up at the moment, forming the wick on this 4-hour candle, approaching these levels that price couldn't break above and close. We just have lower highs and lower highs and lower highs, right? So now for the 4-hour time frame, we established that there's no trend challenge. Now, according to bias and what we were just able to witness through the multiple time frames, I would suggest that we have a sell as our bias. Now, looking at our 1-hour time frame, we're going to be able to establish the range, true support and resistance, and then after that, we would identify a setup for an entry. But this is just analysis. This is not about an entry. This is just analysis. So in this analysis, we're just going to identify our range on this 1-hour, and we will not be looking for entries. But our bias as a conclusion of multiple time frame analysis is sells. So looking at the 1-hour, how can you identify true support and resistance? I know I explained that we draw it on the actual candle bodies, but how do you identify it? And it's actually quite simple. When we want to identify, we always look left, right? If price is currently here, we have to look left. Once we establish what's going on to the left, you can continue to look even further left. When we look left, we're looking at the candle wicks. There's wicks here, right? Wicks is just telling us the high and lows of the candles. But the candle bodies is what's actually providing us with closure. So when we look at these wicks, what we're trying to identify is which candles were able to do what price wasn't able to do, as well as where did these candles fail? Where was their candle failure, meaning that it couldn't continue driving, so it just left these wicks behind, right? We got a wick here, right? So price couldn't close above here, right? Again, price couldn't close above here. There's a small wick there. Wicks. So price couldn't close above here. And then here at the bottom, wicks. Price couldn't close below here. And price couldn't close below here. Just wicks. So actually looking at this area on the 1-hour time frame, this is an immediate range for us. So let's actually map that out. And then I'll give you a little bit more examples of support and resistance. Place it on the body, closure. And then if you hold control and then click, or on the iMac, Apple, and click, then that's going to allow you to duplicate while you drag. So here we have it, right? We have a range here. And the way I actually like to do it a little even further is just like this. Put the rectangle here, just to emphasize what we got going on here. All right, so now we have this range, right? Again, why do we have this range here? Because there's only wicks and wicks. price couldn't close above this area. So that became a strong resistance. And then what do we say about resistance form? Normally a bearish candle after a bullish candle, right? We have a bearish candle after a bullish candle. Indicates that this bullish candle came up and then a bearish candle was formed, indicating resistance formed. And then down here, a bullish candle after a bearish candle, right? Usually indicates support formed, right? Look at that. These wicks in candle failure is indication of good zones. And let's look at some more examples. Let's close this out for a bit. Look at all these wicks. Again, what does that mean? It means candle failure. And candle failure in a sense is just price just couldn't drive past here. It couldn't close above that, right? Price could not close above that. That's why we just have these wicks. These two managed to close slightly above, but the point is, when we're looking for true body closures, we're looking to see where was price able to close above. If price closed above and then closed back down, we already know that's a fake out, right? So we focus on the areas where price was able to close or there was just strong rejections. Price is looking really horrible in these areas. There's way too many wicks, but again, look at this wick, right? And then a reversal, so price couldn't close. So this was a nice support. But that's essentially the point. We're looking for the wicks. When we identify the wicks, we see was price able to close above or below. If price wasn't able to close below, that might be indication of a strong support. And if price wasn't able to close above, that may be indication of a strong resistance. So I'll just give you one more example. There's a ton of examples, but here you go. Wick, 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 wick. So price couldn't close above here, right? Wick, wick, wick. Price couldn't close above here. Wick, wick on the body. Price couldn't close below that. And of course, if price couldn't close below here and it wasn't able to close below here. And then also looking wick, wick, wick. Price couldn't close below that, right? And then again, up here, a bullish candle after a bullish candle was a bearish candle. Resistance form on top of having wicks, right? Now, this candle is a very special candle. Again, it goes back to the ideas of breakouts. This candle was able to do what this candle couldn't do, what this candle couldn't do, what many of these candles couldn't do. It was able to break below this support, which is strong indication that we will be taking sales. Granted that this is with our trend, right? Price is moving with our trend. Finally got a candle that was able to break out and do what these other candles to the left couldn't do. We would wait for the next wick to be formed on a candle with our buy stop just below the candle that broke out, and that would have been a winning trade for us. Correct? This is what we've been teaching in the entire price action mastery course. That would have certainly been a winning trade for us. So this concept of looking to the left to identify what candles weren't able to do and which candles were able to do what the other candles couldn't do, such as this breakout because the other candles couldn't break out. This is a very strong strategy. It's a very strong strategy. Here's another example, right? Got these wicks, 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 wicks. So naturally, we have a resistance here. And then looking to the left. Wicks, wicks, rejection, 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 rejection on the body. Right? We'd probably have a range up here actually as well because the support was already formed there. But just for example, if we saw that there's a range here and then range here for support, on a breakout of this range, we could have taken it all the way down to follow this clean traffic, right? And then we already have this support here. And then price would have broke out even further and we could have drove this down some more as well. So looking here, what do we have? We have wicks, 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 right? Price formed a resistance here. At the bottom, wicks, 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 right? But these were actually the more important wicks because we didn't have any closures. So when we had this candle actually break down, next candle would have formed a wick and then continue down. That would have been our trade, bypassing all of this here. We have to look to the left when we're talking about support and resistance. Looking to the left is going to provide all of the information we need in regards to support and resistance. And then once you've looked and identified these candles that we're just rejecting, you have to define which candle was actually able to do what the other candles were not able to do. And that's pretty much it for the analysis checklist. Again, before you even get on to monthly time frame and before you ever even get on to looking at all of the different time frames, we come to check the news, forexfactory.com. As soon as we get here, it'll have these calendars for today's events. And currently we're at 4:15 for the next event, which is going to be Spanish manufacturing PMI. Price manufacturing index, manufacturing PMI, but there's no news that is major for our pair. If we were trading Australian dollar, this would be concerning right here because that's a high impact news, because we know the red legend means high impact. You come and identify news before any analysis on the charts. Okay, that wraps up the analysis checklist. After this, I think you have a final exam. Good luck with that. I wish you all the best for the final exam, and I'll see you in the community Discord.